Good morning and welcome, Patriot News Hour. Joe and Jason, the Christmas Eve, if you will, on this Monday, the 23rd day of September. Just as you guys know already, we'll be closed Wednesday, Thursday, Friday for the Christmas holiday, which means we have one more show left. Don't forget, though, head out to allamericangold.com for the rest of the week. Hit that shopping cart button. I'm sure we'll throw a few good specials out there, so make sure you go and check it out. Then we'll be back Monday and Tuesday of the following week. We'll leave early Tuesday on New Year's Eve. We'll be closed New Year's Day, and then we'll come back on that following Thursday. Our toll-free number, 800-951-0592. Joe and Jason, Patriot Radio News Hour. Welcome to all the, we got a lot of transplants here in the Valley of the Sun, people visiting family. Maybe a lot of you guys the first time tuning in to hear this, so we welcome all of you. I hope you enjoy the show. So many things to talk about. The year of chaos, it's almost over, and now I'm beginning to wonder if it's going to be multiple years of chaos. I don't know. We had the college football playoff, the big letdown, right? All the marginal teams, they went to 12 teams. All the bottom teams, they all got blown out, right? The Cardinals do what the Cardinals do, right? Another year of no playoffs. The only good thing that really happened sports-wise for me this weekend was the Cowboys are out. Okay, good. Can't stand those guys. The Cowboys, right? You either love them or you hate them. Yeah, I'm a hater. At least those guys are out as well. But did you see Donald Trump? Hey, you know what? Maybe we'll buy Greenland. Maybe we'll take back the Panama Canal. Hey, he's a deal guy, right? He loves real estate. First of all, they did pass a government spending bill. So remember, we're on Friday. We didn't know yet. They got something done. Let's not kid ourselves. They spent $100 billion in disaster relief. And the funny part is that's already in the budget. Right? It's called FEMA, right? They're supposed to plan. Now, I get that maybe, hey, well, this year was a little worse than that year. I mean, we only really had 2 hurricanes that really did any damage. Now, granted, they were big ones, and they did some damage without a doubt. But we know where the money went, didn't we, right? We know exactly where it all went to, so now we need an extra $100 billion. We have to have relief from the farmers. By the way, I know a cattle rancher in Kansas. He was in town this weekend, and so we had a great discussion because beef prices through the roof, the cattle herds just completely disappearing. And it was really funny because he was telling me, he goes, if you're in an area where there's not a drought, it's great to be a cattle rancher. Prices are through the roof, making a bunch of money. He goes, but anywhere else, it's horrible, right? And everyone's got to sell their cows. And so I just asked him. I'm like, well, what's a heifer going for, right? So a heifer is a female cow that hasn't had a birth yet. That's a heifer. And lo and behold, he goes, right, $2,600 to $2,800. And I just started laughing. I go, yep, sounds about right? A $20 gold piece and a heifer, Jason, still interchangeable after all of these years. Think about it, we've had a central bank since 1913, and still today, a $20 gold piece and a heifer are still interchangeable. How about that?
Yeah, you can trick people You could trick people with currencies, right? You could trick people with paper money and paper assets and wheeling and dealing on Wall Street, but a cow is a cow and an ounce of gold is an ounce of gold. And you can produce more cows to try to get the cow price down, but there's you can't. What, are you going to change the grain price? You're going to change the price it costs to herd them around and move them around. The people that actually have to do the work. That's what's good about real tangible things, property and commodities, is that you can't change it. So there's so many people, there's so many commodities, and when there's more people, they tend to make more of the commodities. There's more people on Earth today. They are able to mine for more gold. If you suddenly have less people that are going to mine less gold, and the gold amount will pretty much stay in flux. It's this is why they want you to not look at that stuff. Don't look at gold. Look at all this fancy stuff, the thing on the internet called Bitcoin. Go buy some of that, and good luck.
Yeah, absolutely. It's quite an interesting thing because, listen, here's the bottom line. He just said, hey, for the ranchers out there that are in drought, it doesn't pay to feed these cows through the winter, right? They can't store enough hay to feed them all, and so, hey, we're just going to go sell them. I mean, it's basic, simple math. So I guess the bad news is for everybody hoping for some cheaper prices at the store, don't expect that to happen. Boy, and right in time for the holiday soup. Man, the price of eggs just shot up again, didn't it? Just in time. Old St. Nick, maybe he can bring lower inflation. Probably not. Patriot Radio News Hour will be back right after the break. Yeah, get those tinfoil helmets out. Got drones falling from the sky now. Some light show. Maybe that's what it was in New Jersey. Maybe they were just practicing for a light show. I don't know. We'll see. Quick look in here at the markets as 2024 is quickly coming to an end. We had a rough week last week. We had a rally on the Dow Friday. Kind of broke the losing. Well, technically it broke it Thursday because it was up 15 points. Friday, it got up like 800 points, kind of faded at the end, but still was almost 500 points higher. Today, about 300 points lower. So consumer confidence came in actually lower. So when Trump got elected, the Republicans were pretty fired up, maybe waning just a little bit. The S&P is lower. The NASDAQ still higher for right now. The 10-year note, 457. Again, we'll keep looking, 460. Right? We're looking at 460. Close above that level. Look out, right? Rates will go even higher. And then the currency markets, kind of quiet today. The lone exception, that Japanese yen, still above 157. Again, it's kind of funny. 4.6 on the 10-year, 160 on the yen. That's the other part, right? When it gets above 160, the people start to freak out, and we start worrying about that yen carry trade. We had one breakdown this year, and we told you that's not the end. It's not over. We just don't know when round two begins. Oil's down 60 cents today. Gold's down $10 today. Silver, flat. 29.51 right now. I guess silver's up 2 cents. We'll call it flat. But remember, be more diversified than you've ever been. Think about the new signs we got just this last week. Right? The yield curve fully uninverted now and steepening. Right? Remember when the 10 and 2 year uninverted, we kind of said you had 90 to 180 days. Well, we're about 90 days in, and now the whole curve is completely uninverted. So, by that timing, okay, got about 90 days. We'll see if it can go beyond that. Of course, that brings us to March. One of the things we had, right, we had the CR that passed Friday. Only gives Trump to March. No debt limit was in there, right? None of that stuff was in there. So we're going to have to do this dance again coming March. CEO quits. Broke a record this year. Interesting, right? Because we've seen the top, all the record highs, right? The S&P had close to 60 record highs this year. That's always the signs, right? Signs of tops. We talk about valuations, leverage, margin, right? All of these things that have preceded the previous crashes. We had all these same things in the other crashes. This is why we keep saying, get more diversified. You got big money in IRAs, call us. Take part of that. You don't have to take the whole thing. Hey, I got $1, $2, $3, $4 million in it. Well, maybe you're going to take 10, 15, 20% and put it into gold. Call us. We can help you do that. There's no penalties, no fees. You don't pay taxes. You're not going to get whacked. Then check out our friends over at Y Refi. Up to 10.25% fixed rate of return. Man, that's not too bad. Wait a minute, I'm guaranteed, but what if this happens? What if that happens? Well, it doesn't matter. Up to 10.25% fixed rate of return, not correlated to the stock market, not correlated to the Fed. Doesn't care if Donald Trump wants to take back the Panama Canal, buy Greenland, whatever he wants to do, it doesn't matter. None of that stuff matters. Check them out. InvestYRefi.com or just call them 888-YRefi24, 888-973-3924. Friday we told you about Macy's shutting down 65 stores. Big Lots now going out of business. Over the weekend, it was Party City's turn. They just filed bankruptcy. I think it was earlier this year or late last year. They're going out of business. All their stores shutting down. This morning, the Container Store, it filed for bankruptcy. My guess is, I don't know yet, Jason, they haven't said it, but why do I get the feeling we're kind of getting these patterns on these retailers now? We're going to file bankruptcy, and then 6 months, 9 months later, they're like, never mind, we're just going out of business.
Yeah, I saw some of that, and, we got, the New Year's coming, and everyone's looking at the books, right? And
yep.
It seems to me that there's going to be a lot of businesses. I mean, every time you report, you report this stuff every year. I've been looking at this for years with you, and it seems like at some point there's a break in it, there's a cycle to it. At some point there's kind of a break to it. Then you start to see some stores, hey, Walmart's going to open a few or whatever. But it just seems like it's a grindingly worse and worse and worse over the last 2 years, Joe. This isn't just today you're reporting stores shutting down. This has been going on for a couple of years now, and I don't see it stopping. It just gets more and more and more and more. I mean, here in Colorado, the Starbucks workers are out there wanting to create their union, right? And they want better pay and they want to be treated fairly. And I'm thinking, what are you guys doing? They're just gonna fleece you guys, and they'll shut down stores if they don't like what they see in Colorado. It's pretty bleak, Joe. And I see more and more store closures, and Big Lots is, I think, a big warning to the rest of these franchise businesses out there. They're going to shut down stores and get lean because they're going to have to.
Yeah, and I think we're going to just see, and again, we talk about signs, right? Bankruptcy filings for businesses. Right? We're back now to where we were at the financial crisis. So this is starting to pile up here, and it's just one more thing you worry about, right? The banks already are holding tons of bad loans on commercial real estate. Now all of a sudden, and that's the office space, but now the retail space in commercial is starting to buckle, right? And so you just start adding these things up, and all of these signs just tell you caution ahead. And of course, obviously, the biggest thing is what's going on with the central bank here. It looks like the markets are now worried that the central banks, once again, here's a shock, made a mistake. I don't understand this. You go back and you look at central bank history, especially since 2000. It's nothing but mistake after mistake after mistake. I mean, these guys can't get fired. It's crazy. I mean, if they worked in the real world, all of these guys would be fired. Right? Everything they say, well, this is going to, inflation's going back to 2%. Right? Next thing you know, at this last meeting, oh, well, it's still going back to 2%, but it's going to be a while. Not this year, not next year, not the year after that, but, sometime in the future. The rate cuts now looking like they were a big mistake, right? They did remember the 50 basis point cut they did? They were acting like it was an emergency. Yeah. Was it? I don't know. GDP's been 3%. The unemployment rate, wow, it's up to a whole 4.2. Right? Any other point in U.S. history, they would have been talking about we need to raise rates. And yet, Jason, they've lowered rates by a full basis point. And the 10-year note today, it's sitting right here at 4.57. At 4.6, it will be 100 basis points higher than when the Fed started cutting rates. What was that in September, whenever that rate cut was, end of August, beginning of September. Jason, we've never seen that. That has never happened before. And it's a big problem.
Yep. Well, I think that the Fed is counting on when there's a market, a recession, a crash. I think they're depending on, okay, that's when the prices will cool. I think that's what they're depending on. And I don't think that's going to – I think they're going to be really shocked that if there is a market crash or we just see this grindingly slower market that we've been talking about the last couple of years and the prices keep going up, what are they going to do then? I mean, I think Big Lots just figured out that the market's no good and the prices are still going up. It didn't save Big Lots to have higher prices on stuff, and they're out of business. And I think these other businesses that are going out, this grindingly slower market and a possible market crash, it may happen. They're going to keep, lowering the rates to try to slow that from happening. But I think, Joe, we see higher prices, and the market's still suffering, and they're not going to know what to do. Oh, wait a minute, we can't get back to 2%. There's inflation still. I don't. Something major will happen, Joe. And are they ready for it? And here's the thing: do they know it's going to happen, and they're getting ready for it, or are they just riding the wave straight down and they have no answers? We'll have to see.
Yeah, we're going to really find out. And again, the spending side of it, right? We continue to look at deficits. That it's one thing to say, okay, it was COVID. We're in the throes of a financial crisis. Okay, maybe then you could justify debts of $2 trillion plus a year. Right? You can at least give it a reason. Right? I don't know if you can necessarily justify, but you can give it a reason. You got to remember, this is the good time. And we're already looking, listen, there was a good reason why Donald Trump wanted that debt limit increased for 2 years. There's a good reason for it. He's not dumb. Donald Trump's not a dumb guy. Anyone who thinks he is, you don't know what the hell you're talking about. He knows what's coming in 2025 and 2026. By the way, I still got bad news for Medicare and Medicaid. So my mom's here. So my mom's on Medicaid, or I'm sorry, on Medicare. My bad. And she was talking about, man, let me tell you what's going on. And she's with Blue Cross Blue Shield. And why is she with Blue Cross Blue Shield? Well, guess what? They give her the best deal. She goes to the doctor, doesn't have a copay, blah, 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 blah. She's got Part B, all that stuff. Well, guess what? Her doctor's retiring. Can't find anybody that will take Blue Cross Blue Shield in Syracuse. None of them are taking new patients. And, of course, they all want her to switch to something St. Joe's is offering. They're a big healthcare network in the East. And my mom goes, well, I can do it. I just don't want to. She goes, I'm going to have to pay $40 every time I go to the doctor. I got to pay, they don't cover this, or I got to copay that, right? So she's like, man, I don't want to pay more. And I'm telling her, well, Mom, there's a reason why no doctors want to take Blue Cross Blue Shield anymore. Right? Because they don't get paid enough money, right, Jason? I mean, it just is what it is. This is what's coming. And wait till Medicare and Medicaid run out of money in 2026. Shh. Nobody wants to tell you that part. They want to tell you about Social Security instead. 800-951-0592. Joe and Jason. It is the 23rd of December. Merry Christmas and happy holidays out there to everybody. We got one more show tomorrow. We will close early tomorrow. So if you need to call us, get that done. Otherwise, you can go to allamericangold.com. Click on the shopping cart button. We'll be running sales all week long at allamericangold.com. But today, I'm really going to go. This is the stupid special of the day. Stupid in that this price is, you just got to get in on it. $5 Liberties and an ounce of silver. So, by the way, tomorrow will be the last day where I'm going to throw 3 ounces of silver essentially into everything that we do. $695 gets you both a $5 Liberty and an ounce of silver. That ounce of silver, I mean, $30, and that would be below cost. Can't buy an ounce of silver for $30. Can't do it. So that would put the $5 gold piece at $665. Jason, that's if you bought 4 of them, that'd be $2,660. I mean, gold spot is what, $2,615? Yeah, that's a incredible deal. This is so below what you can buy any fractional gold coin for. Think about like a 10th ounce right now. $320. And I'm cheap at $320. That'd be $3,200 an ounce. You're talking about getting a pre-1933 $5 Liberty, 1866 to 1907, and an ounce of silver for only $695. Now, here's the catch. There's always a catch. I only have 50 of them. That's it. That's the only catch. If you've never ordered from us before, it's so easy. We're not like anybody else out there. You just call the 800 number. One of the girls will answer, and you just say, I want the special. That's all you got to say. You know what? They're going to ask you one really hard question. How many would you like? And you just tell them, I just want 1, or I want 4. Heck, I want whatever you have left, whatever it may be. And when you do that, we're going to tell you the total. We have offices in Arizona and Colorado. If you want us to ship to you, we charge a flat $35 and we ship FedEx. Period. $35 to wherever you told us. Or you can come to our offices and save the $35. Well, how do I pay for it? Well, how do you want to pay for it? You write a check. You can pay with cash. You can put it on a credit card. We charge 2%. That's it, just 2% for a credit card. You can send a bank wire, whatever, however you'd like to pay for it. Well, I can't come today. We don't expect you to. And every time you order, when you place that order, we give you a trade number. That locks you in. What does that mean? Quite simply, if gold goes up $100 after you've gotten that trade number, nothing happens. We don't call you up. Oh my gosh, gold! You got to pay us more money. You're locked in. Now, it goes the other way too. Right? Yeah, gold goes down $100. Yeah, you don't get to call up and say I want to pay less. It doesn't work that way. We lock in. You lock in. You put a check in the mail, or you say, hey, I'm going to pick up, and we'll just tell you, okay, we're going to call you next week because obviously it's Christmas. We're not going to call you this week. We'll call you next week. And you come pay for it and take your product, however you want to do it. We are so easy. But what happens? I know how these things are. I accidentally screwed up and called the guys on TV. Man, please never do that. I would love it for you to buy from us. I would. That'd be great. But if you learn any one thing from listening to this show, never, ever buy anything from the TV. Unless you want to lose half of your money. Never, ever buy gold from the guys like Sean Hannity or who's the other guy now? Dan Bongino, I'm drawing all the blanks. All the Sebastian Gorka, and they're all 40, 50% guys. We operate in single digits. How do I know I'm not getting ripped off? Well, look how close to spot you're buying. That's a good indication of what a great deal it is. So just keep that in mind. 800-951-0592, the $5 Liberty, and an ounce of silver, $695. We only have 50 of them. And look, now silver's like up 10 cents now, so it's getting even better, right? 800-951-0592, and it's going to be a very quiet week this week. Obviously, it's the holidays. They'll still give us jobless claims on Thursday, but not really a lot of data out in the marketplace, and then we'll wait for, obviously, 2025, and how much money is really going to be able, how much money can we really fund? How much debt can we really fund in this country? I think we're going to find out. If you're wondering about market cap, let me give you a great example because they're so elevated. Let's use Tesla as the example. Now, Tesla doesn't sell a lot of cars, just so you know. Right? I mean, they'd be lucky to sell a million cars in the United States. They don't sell that many. Do you know that their market cap is $1.4 trillion? $1.4 trillion. Do you know that if you added up the next top 30 car companies, that you would barely get to Tesla's valuation? To give you an idea, Toyota's only got a valuation of 230. BYD, who, by the way, that's a Chinese company who dominates Tesla, they're at $107 billion. General Motors is at like $58 billion. Ford, they're only at $40 billion. Same with Stellantis. They're about the same. Yeah. You think maybe something's a little off in that equation? I don't know. Maybe I'm wrong. Maybe it is worth more than every other car company in the world combined. 800-951-0592, $5 pre-1933 Liberties, matter of fact, 1866 to 1907, plus an ounce of silver, $695 at 800-951-0592. You know, Jason, people are wondering, oh, gosh, gold's had this big run. Like, how far can it go? Where's like the really big support? Like, because right now support's just under 2,600, 2,696 or 2,596. I mean, that's kind of support. Resistance right now is 2,667, 26. Let's just call it 2,670. It's kind of the resistance. So gold's kind of right in the channel there. But the 200-day moving average starting to really catch up here. This is, I think, getting ready for the next leg of gold. Because you got to remember, gosh, you go back to like May, June, when gold was already, gold was sitting right near that $2,600 level. The 200-day moving average in gold was like $2,100. And there was a big gap between the two. Well, every day that gap gets smaller and smaller and smaller. Jason, we're right now at $2,534. So this 200-day moving average now, well within $100 of the spot price. And I think this is going to be the next leg for gold, right? When we sit there and say, when is gold, say 3,000? When is 3,000 going to be on deck here? I think we're closing in on that as this. We just needed, right, consolidation. Let that 200-day moving average catch up, because that's always the big support level.
Yep, that's you got to look at those supports. It seemed like we were getting to some lower highs the way it's been moving, and I've been wondering, well, are we going to drop down a little bit? Regardless of the pattern, if gold goes a little sideways into 2025, and even goes down a little bit, it's not going to be, I believe, like a years-long stagnant situation. And that's because it looks like we have built-in higher inflation. And so you may be looking at another new level to be buying. I mean, you could have bought last year at this time. You would have been so much better off as far as ounces in your pocket. It's not going to get better. You can't sit around and wait for it to go down to $2,000 an ounce. What you want to do is probably as soon as now, today, and maybe how many weeks do you have? How many months do you have? I think gold may not be, is going to go up another $600-700 now, but next year there could be a position next year where it will start moving and moving very quickly again. So get your financial affairs in order and find out how much you've got sitting in savings, because you need to move it. This is your savings. Gold and silver is your savings. Quit holding it in the bank and smile at your little digital number there. What you need to know is how many ounces you have. How many ounces of gold do you have? How many ounces of silver do you have? And then don't worry about the dollar. The dollar is not getting better. The dollar is getting worse. There's pretty much everything that can be against the dollar is against the dollar right now, Joe.
Yeah, I mean, the only thing, I guess, it's what they like to say, well, it's the cleanest of all the dirty shirts, but yet it's got barf on it. You spilled everything, all the condiments. I mean, you've rolled around in the mud. The shirt is an absolute mess. So make sure, one of the things we talk about, how much do I need? And we always said, an ounce of gold for every year you've been alive is a good place to be. And I'm starting to question that now. And only because of inflation. Everything is so much more expensive. And now I think the fallacy that we fell into was, oh, don't worry, the Fed will just go back to zero again. And everybody out there, oh, yeah, and rates are coming down. Look at what just happened. They've cut an entire percentage, and rates went higher, and a lot higher. And now, what did they say at the last meeting? Oh, we need to take a break. We don't know. You know, they kept saying, oh, we're data dependent, data. Well, the data told them not to cut rates. They did it anyway. And now what's the data saying? Uh-oh, we got a problem. December, this month, we will spend $150 billion just paying interest. If you do that every month, that would be $1.8 trillion. Here's the problem. Guess what? Bank of America already said $1.6 trillion. We only did $1 trillion this year, $1.6. That would add $600 billion to the deficit. But here's the problem. Bank of America thought rates would be a little lower because the Fed was cutting. Jason, could we be in a scenario next year where we've got to spend $200 trillion just on the $2 trillion, not $200 trillion, not yet anyway, $2 trillion on the interest and the debt? That's why Donald Trump wants that debt ceiling raised. He knows. Hey, first of all, I want to give tax cuts, and I want to spend some money, right? I'm going to offset it with some tariffs and whatnot, but I need time. I'm going to need big time. And, Jason, I think there's a very real possibility that we get very close to $40 trillion this time next year. I think that's what we're going to be staring at.
Yeah, I mean, I think Donald Trump, the main reason he's become president is he's going to threaten every nation when it comes to the dollar. He's going to do everything he can to make the dollar king. And, you know, when Joe came on the beginning of the show and talked about how, well, he's going to go take back the Panama Canal, or so-called negotiate. Well, the Panamanian leader, you know, decades ago, he martyred himself to keep it away from America. So I guess go down there and take it. Is this a military action that we're talking about? Well, that isn't going to be good for inflation. That's going to be spend more on the military. You know, that's all going to be good for gold, all of that. I mean, we got some stuff coming down that's very ugly looking, Joe.
Final segment. Come back if you can take 800-951-0592. Gold's down 5, 26.17. Silver's up 10, $29.58. Today's special, a $5 Liberty gold piece, 1866 to 1907, and a ounce of silver for only $695 at 800-951-0592. Remember, tomorrow we will be doing the show tomorrow, but then we're going to be heading out. So it's going to be a short day tomorrow, and then we'll be off Wednesday, Thursday, Friday. We'll come back on Monday. But just go out to allamericangold.com, and you can see what kind of specials we're going to be running over the weekend. And, of course, you can order 24 hours a day, 7 days a week out there. By the way, this trade war already heating up, right? We know this. We've been leveling more sanctions against China. China's been retaliating. It didn't stop this weekend. The Biden administration doing some more investigating into the Chinese semiconductors. The Chinese saying, okay, you guys want to do some more sanctions? Well, we're going to restrict now the selling of rare earth minerals, and the three big ones that China is saying that as of now they will not ship them any longer. Now, we'll see what that means. You know, we know, like with Russia, right, Jason, there's always, we're not going to ship it, wink, wink, nod, nod, but essentially what the Chinese are known is if you want these rare earth minerals, it's going to start costing a whole lot more. And I think this trade war, listen, this thing gets worse before it gets better. That's what I think.
Well, it's not just America that has financial concerns, right, Joe? So when you start slapping on percentages that are going to make your country pay out more to ship goods out, it's not going to be looked at kindly. we'll see. I think every country is going to. We're going to see what the real value of things really are, right? Who's really got the extra margin and who can actually afford to lose a little bit? Because if what I think is happening, I don't think China can really afford to be paying, what is it? I don't know, 25% more, 50% more, whatever it's going to be. Joe.
I don't know. It's interesting. In the rare earths, they mine like 60 to 70% of it. But here's the thing most people don't know. They have 90% of the refining capabilities. So it's one thing to mine it, right, Jason? It's a whole other thing to refine it. So there's a lot of these other countries where they mine it, they've got to send the raw material to China to get it refined. And now China's saying, well, okay, let the dance begin. And let's not forget, look at Canada's government. Right, they want to throw Trudeau out now because, well, they're like, hey, the trade war is here, and oh, by the way, we've got debt problems. France had to get rid of their government; they've got debt problems. Germany, debt problems. South Korea, right? That guy tried to impose martial law. Why, Jason? It's all the same thing. They all want to spend money, but they all got debt problems, just like the United States.
Let's just see what happens, right, Joe? It's 2024's got about a week left, right? So kind of looking forward to next year.
Yeah, but boy, let me tell you. Yeah, me too. Now I'm getting a little worried. We'll be back tomorrow. Stay with us, though. We got the FFP Cup coming up.